Hello and welcome to NDTV Profit. I am Muralidhar Swaminathan. We on NDTV have been bringing expert voices since yesterday after the budget was presented. Today we are bringing in Naren of ICICI Prudential AMC. He needs no special introduction. Naren is one of the leading voices in the mutual fund industry and the markets. Naren, welcome to the show. Thanks for joining us. Okay, my first question, what are the big takeaways from the budget for you?
See, basically, this is not the first budget presented by the NDA government or by the Honorable Finance Minister. We've seen a situation where over the years they have committed themselves to very good macroeconomics, very stable macroeconomics, and kept the country on a road where they are very, very clear that you have to handle fiscal and current account and everything in a very, very good way. So this is part of the trends. We all want some fireworks of some kind, but then they keep things very stable. The macro so stable that India has been one of the countries where the bond market, the currency market, everything is very, very stable at this point of time, thanks to the macro at this point of time. Then there is nothing like, something which has drastically changed from 2 days back to today. That's why even the markets haven't drastically changed from 2 days back to today.
Right. So very clearly, I think as the Prime Minister himself has been saying, the roadmap for 2047 has kind of been laid out. So from your reading, what we require is sustained growth. Do you think the specific areas of focus in the budget will help us achieve that sustained growth of 7% plus?
I think ignoring not just the budget, I think overall I would say that, if you look at the last 5 years, the kind of growth, for example, we have seen in services exports due to global competency centers set up in India has been just fantastic. And so we're seeing very, very sustained growth on the services side, particularly export. There was a time when, we had exports only of software. Today, we have got competency centers set up by so many multinationals in India, which are focused not just on IT, but on all kinds of services supporting their global outfits. So on that area, we have seen that. Now, the challenge actually is to create a situation whereby we are able to do that in manufacturing, and for that, budget is not the only document. We have to continuously keep improving the cost factors of cost of production on the manufacturing side, whether it is logistics, whether it is land, whether it is power, whether it is labor, everything, and there is a continuous challenge, because it is not that our competitor countries like Thailand or Vietnam or all those countries are not also trying to do the same thing. So even though, there is a China plus one strategy and the fantastic work done on PLI, which is not part of the budget document per se, I think there are continuous challenges because we have adequate competition in that area, unlike what we've seen on the services side. And the effort that needs to be continuously done to ensure that our power cost is reasonable or logistics cost is reasonable and land cost is reasonable, I think is a continuous onward journey, if you ask me.
Right. Typically we are a consumption-driven economy, and to a large extent I find that the capex, of course, is 11.1 lakh crore, but the government has very clearly, the finance minister has said that they are not going to increase it further from what they did in the interim budget. So the ball is now in the court of the private sector. Do you think private sector is not doing enough to go for mega projects or scale that is required for us to sustain this kind of a growth?
I find, we at ICICI find this entire debate on private sector capex very not so logical. See, let's assume you're a cement company and you find that your capacity is utilized. Why would a cement company not put more capex? Suppose you're a two-wheeler or a four-wheeler company and your existing capacity is fully utilized. You'll put up more capex. So I don't think this debate on this entire private sector capex is justified at all, because every company will act on its own interest. Some of the problems that are there is to do with the fact that Indian corporate sector is in fine fettle and in great shape. So instead of borrowing from the banks or projects or from financial institution to put up projects, they can just do it with the internal accruals that they have. That you don't see projects that are there. And second is, some of them are now not putting up grassroots projects where they need to actually set up from the way, from buying from land, etc. And land is not costly in India. I'm sure land is much costlier in India than in most of the countries in the world. So we have a situation where they're doing grassroots projects at this point of time. So this entire debate on private sector capex is quite illogical, because of the fact that many of them will do it if it makes sense to them, and why would they not do it? So as the sectors get fully utilized, they will do it, and we are seeing it across all the companies that we cover at ICICI Prudential. That most companies which are doing well and are using their capacity fully, they are doing capex and expanding. Are they doing it in new location? Are they doing it in existing location? Many of them are doing it in existing locations.
I think that's a very, very important insight that you have given to us. It's important to distinguish between capital requirement based on business, based on growth of individual companies as opposed to the country's ambitions, if I could say. The next important issue, Naren, is about jobs. This has been a serious concern. There is growth. We have had tremendous sustainability in terms of growth, and we are the fastest growing, but in terms of jobs there has been a huge problem. The budget this time around has specifically taken the route of incentivizing employers to generate jobs. What are your thoughts on this?
I think it's a fantastic step. I think, we have to encourage job creation by employer. Encouraging job creation by the state government or central government is not the way. I think the step that the government has done this time, both through the apprenticeship process and the other process that they give incentive for the companies to hire, particularly people who are paid less than a certain amount, is the right way forward. And I think the model is absolutely correct and logical at this point of time. And that is the right way. And I think we are very, very impressed by the way the government policy has been done in this budget in this area.
And that will lead to skill development, which is much required, I suppose.
Yes, absolutely. If you look at all the areas where we have actually gained in skill development, whether if you look at IT or whether you look at chemistry in drug area, all these areas, the skill development has happened because of these kind of things, and the step taken by the government this time to do it is, I think, a great step in the long term. Whether it will help in the next 3 to 6 months, it may not, but I think this will clearly help in the long term.
Okay, the other key area which is very critical for India to unleash its potential is the MSMEs. This budget is again focusing on MSMEs, especially their credit needs. Now that's a huge problem for MSMEs. Their cost of credit, even during normal interest rate regime, is very high. What are your thoughts on this? How do you think this will help the MSMEs unleash their potential?
I do not know. Maybe, I've worked for 35 years and we've seen in 90s people paying 16, 17, 18%. Today, even MSMEs, many of them, which are financially in good shape, I think they pay a single digit, 9.5, 10% maybe. So, I think it is important for MSMEs to practice good financial management and have good balance sheets. And if they do it, I think today there are so many providers that their borrowing costs are also more reasonable. I have seen unreasonable borrowing costs in 90s. I don't see that at this point of time. I think the challenges come to MSMEs if they don't have good balance sheets and they do not have good profit and loss account. And I'm not very clear what should the government do, what should the lenders do with all these kind of MSMEs. And if they have competitive advantage and they are actually going through only a temporary downturn because of some industry-related issue, then it is fine. But if they are actually uncompetitive and they do not have any competitive advantage, should they be lent more and more money to just survive or prevent them from dying? This is a question I do not have clear answers to.
Yeah, very important thought. I think, again, as you rightly said, it's not just making funds available, they should be competitive. But as an aside, still investors love to invest in small and mid-cap stocks. That's where they are making a lot of money.
Yeah, but when the government talks of MSME, they are not talking of that segment. They are talking of a segment much below that. Today, if you look at mid and small cap stocks today, most of them are able to do QIPs, they are able to do disinvest, they are able to raise money in the form of fresh equity very, very easily. So for them to raise money is not a problem at all, but they are not the MSME. I would say they are one step ahead of MSME, they are much bigger. And in SME IPO, where we are not participant, I think we are seeing some excesses there in equity valuation there, but the problem is not lending there. The worry for me is the equity investor there, and there the challenges we are worried about is the retail investor who is investing in the SME IPO. Mutual funds are not connected to that segment in any way, but there we are worried about the retail investor there, not about the issuer.
So that brings me to the specifics. The most important issue that has been talked about and some action in the budget is the F&O trading. The huge volumes that we have seen in F&O and the surge in trading in F&O. Finally, we have seen a hike in STT for F&O. Do you think this will dent the F&O volumes, or will the F&O trader continue to trade in spite of this?
Not at all. The increase has been very nominal, so I don't think it will have any impact on F&O trading in any way. Because it's not that 0.0625% becoming 0.1% is going to change the F&O trading. And I see the challenge is something different. Do investors understand the risk of F&O trading? Because if you have a one-way bull market after 2020-21, people don't understand the risks of equity as an asset class, and that is the biggest challenge that is there. And we at ICICI Prudential keep talking of asset allocation, and asset allocation. But people keep telling us, why don't you talk equity, and equity? And that is the challenge that we have at this point of time, because equities have not created any risk for many years at this point of time. They have not given any meaningful decline of even a decade, 10%. So that is a challenge. And so if it doesn't give a decline, people don't lose money in F&O also. So this is the challenge which we keep grappling with at ICICI Prudential, how to explain to investors that equity market carries a risk. And that is a challenge because if the equity market never declines or for extended periods of time, then the F&O trader also tends to overtrade because they don't recognize the risk of equity market. And that is what a famous economist called Mr. Minsky wrote an entire theory which finally played out in the global financial crisis in USA in 2008 in real estate.
Naren, you alluded to the fact that equity investors should also understand the risk. Now, we have been in a very kind of a prolonged bull run and everything looks very nice. But at this stage, in spite of the increase in the capital gains tax from long-term capital gains tax, especially from 10 to 12.5%, the market seems to have taken it in the stride. Is it because we are all blind to equity risk?
No. See, first of all, capital gains tax plays after the profits are made. So if you made 35% profit after tax instead of 31.5, maybe you'll make 30. How would it matter? So I think the sensible way in which the government has handled when the market can bear it, you increase the tax. And I think both the finance secretary, Dr. Somnathan, and the revenue secretary, Mr. Sanjay Malhotra, pointed out yesterday very clearly that most of the profits are being made by people in the higher tax brackets whose actual tax rate is much higher than the capital gains tax rates on both long term and short term. So I think this is something the market can bear at this point of time. So I don't think this is an issue.
Right. Okay. That's not an issue. That's on the brighter side. On the brighter side, one more important thing, if we leave out the small increase in standard deduction and stuff like that, the finance minister wants to do a comprehensive review of the Income Tax Act, which has been, I think, pending for a very, very long time. The 1961 Act. There have been some changes here and there. What are your thoughts? That could be a very important part or role to play in raising more revenue and stuff like that.
I don't think that revenue is really the problem. I think litigation is the problem. I think if you look at the revenue on direct tax side in the last 3 to 5 years, I don't think the government is cribbing about the increase in revenue. I think they've been getting good increase in revenue because of the brilliant work done on computerization done. That, when you file the return on July 31st, almost every source of income that you have gets automatically populated through that 26AS or whatever it is. So I don't think the revenue is hardly the problem at this point of time for Government of India on the direct tax side in individuals. The challenge is only litigation and what can be done to cut litigation and unnecessary litigation and unnecessary debates on litigation, etc. This is what I think. I'm no expert in tax law and litigation, but I don't think, I think direct taxes have been moved beautifully on the retail side in the last 5 years. And I don't think the objective of the entire review of the direct tax code is to increase revenue.
Sure. Okay, so let me just come back to one more specific. Which are the sectors you would focus on at this point in time? The market has been looking at PSUs, the defense companies, the railways. Based on the budget, which are the sectors you would like to focus on?
See, we don't look at today, budget has to be looked at as only one event, and it has been very well done by the Government of India, but it is only one event. See, there are other things like GST Council, what happens globally, what happens to Fed, what happens to interest rates globally, etc. How does the Reserve Bank handle interest rate policy, what happens to crude oil? So many factors are there. But from a sectoral point of view, we've been positive on banks because it is a sector which has done very badly, but even after the budget, it hasn't done well because the challenge for raising deposit for the banks still remain. And we do like pharma in the near term because sectorally at this point of time, between all the defensive sectors, it has been one thing which is not done as well as the other sectors over a longer period of time. And recently, the consumer staple sector has done extremely well. So we like pharma. And insurance is another sector which hasn't done too well over the last 4-5 years. So it's a sector we like. So these are 3 sectors we like at this point of time on a relative basis.
What about FMCG? FMCG has been kind of a laggard and it's kind of catching up only now. Do you think that sector would come back considering the focus on jobs and welfare and the kind of revival in rural demand? How do you view FMCG?
After a long time in some of the funds which I directly manage, we did buy some of the consumer staple stocks after being negative for a long period of time. If you look at some of the stocks, they've gone up 25%. In the very recent past in no time. So today, after a 25% move, we are reassessing whether it makes sense to buy them or not to buy them. Is it time to sell them or is it time only to hold them? We are in that process of reassessing. Actually, it's one of the sectors which has done extremely well in the recent past.
Let me shift focus to slightly broader issues. I'll go back to the issue of returns from the market. At this stage, after getting past 24,500, what kind of returns should one expect, assuming long-term investors, should one be looking at 12% or 15%? What is a reasonable rate of return one should expect from the markets?
I wish I could give you a number. If anyone gives you a number, it's only some of the people have the ability to give numbers. I don't have the ability to give you such numbers, but the market is not cheap at this point of time. And to give a number at this point of time, what we've been repeatedly telling people is practice asset allocation at this point of time, invest in equity, debt, and gold, follow an asset allocation strategy, follow a multi-asset strategy. We were a bit worried about gold, but after this big drop in customs duty yesterday, gold has crashed domestically, so that has helped. Clearly, that again, we can talk of multi-asset again starting today. So I would say that clearly we are believers in multi-asset strategies, we are believers in asset allocation strategies, we are believers in any product which does more of asset allocation, like whether it is equity and debt or balanced advantage kind of strategies, anything which involves investing in both equity and debt, rather than taking a call only on equity at this point of time. And it's very tough to predict returns. I think anyone who's predicted returns have gone wrong most of the time, and I would refrain from trying to predict that on a channel like yours, because then I'm sure to go wrong, and more people I meet that say you told this on this day. So I would refrain from giving any numbers.
I fully understand, but I will circle back to equities because everybody puts a lot of money in equity funds. You said the markets are not cheap, which is a general view. Are you sitting on cash? If so, how much? Or how do you deploy in this kind of a market?
We have a tough responsibility of we have collected this NFO called energy opportunities, yes, and we have to manage that public money in the right way. Having said that, our basic approach is that we have a scheme information document approved by SEBI for each of the strategies that we run, and we have to follow that strategy and look after the investors' interest based on the scheme information document approved by the regulator, and that is the approach we take. Overall, our view is at this point of time, do asset allocation, and we are not cheerleaders for the market only on account of valuations, not because of fundamentals. We are very positive on the fundamentals, we are very positive on the macro, but we are not cheerleaders on the market because of valuation reasons, more so in small and mid cap. But even large caps are no longer in a framework where you can say that they are thumping the table buys or something like that, again due to valuations. There has been no problem with the fundamentals of India or the structural long-term story of India. And that is the reason we believe that systematic investing in large cap or flexi cap kind of things continue, but the markets are not cheap.
So which means you will deploy incremental cash only on dips?
Yeah, no, we follow the principle of being in line with scheme information documents in each case, and that is what is the framework that we follow in every fund that we manage of every scheme, and that is the model. So this concept of having cash or this doesn't exist. Obviously, in a strategy like balanced advantage, we have more flexibility and we have certain flexibilities to hedge, whereas in some of the other strategies, we don't have that flexibility.
Right, very interesting and important insights from Naren for the investors. It's about not being a cheerleader, not doing table thumping to buy stocks, but it will be long term, it will be on fundamentals. Fundamentals are strong, the prices might be high now. Thank you, Naren, for enlightening our viewers on what the long term investment should be.
Thank you.